And there you have it, the closing bell, the New York Stock Exchange, capping off another day of trading on Wall Street.
It was a decent day for the stock market. The Dow Jones is up more than 400 points. The S&P 500 and NASDAQ are each up roughly 1%. For more on this, let's bring in Gregory Daco. He is the chief economist at EY-Parthenon, Ernst & Young's consulting arm. Welcome to you, Gregory. Thanks for joining us. So what was driving the markets today?
Well, I think we have a number of new developments, both on the policy front and in terms of economic data, with the jobs report this morning showing that the economy is still adding a decent number of jobs, with 261,000 jobs being added, and a modest uptick in the unemployment rate, but nothing alarmingly worrisome from a job market perspective.
So you mentioned the unemployment ticked up to 3.7%. We also saw the economy, as you mentioned, add more than 260,000 jobs. So what should people make of that gap?
Well, I think we're in an environment where there is tremendous uncertainty as to the outlook over the next 3 to 6 months. And while businesses are still hiring, they're still investing, they're being a little bit more cautious with their decisions. They're not hiring as fast as they were previously. They're putting on strategic hiring freezes, in some cases strategic layoffs, and exercising much more discretion when it comes to right-sizing their talent pool. So in that type of environment, we're likely to see a combination of slower job growth going forward and likely some uptick in the unemployment rate. So far, it's not been dramatic, but I would expect to see more of a dramatic slowdown in employment growth over the coming months as we enter 2023.
Well, you were quoted in an article on CBS News saying, quote, "It's an economy where businesses are still investing in hiring, where consumers are still spending, but where all of this activity is being done with much more discretion." So, Greg, what does that discretion look like?
Well, it looks like an environment where essentially inflation has remained persistently elevated, where now interest rates are rising, where the cost of living is becoming more expensive, where the cost of doing business is becoming more expensive, and where final demand is softening. So in this type of environment, we're seeing the different actors of the private sector essentially exercising more caution when it comes to their outlays or their investment decisions. So that tends to lead to a slower pace of economic activity. And I think that against a backdrop where global activity is slowing, that is likely to portend to a recession in the U.S. economy around the turn of the year and going into 2023 amidst a globally synchronized but uncoordinated monetary policy tightening cycle.
All right, Gregory Daco breaking it down for us on Friday. Thank you so much.
Thank you.